Okay, welcome back to the channel. So if you didn't know, we're shifting towards electric vehicles which have batteries which contain natural graphite. So there's going to be more demand for this. The money goes to petrol is going to go away from petrol into electric vehicles and into these things here. Natural graphite being one of them. Synthetic. So if you didn't know, the anode of the battery, they mix synthetic and natural graphite together about 50-50 to make the anode of the battery. It's the only way they can do it now at large scale. They are adding silicon, but it's mostly going to be graphite. Synthetic graphite comes from petroleum coke, and we'll be getting away from petrol, so it might be more scarce, more harder, more expensive to get synthetic, meaning we'll go more to natural as well. So we need 6 million tons by 2035, probably half that by halfway there, 2030. So we need a lot of it. You need this many mines doing 56,000 tons a year. So some mines will do 300,000 tons a year, but still we need a lot of it. And I'm going to show you some companies that are small now that will go from sub $100 million, sub $50 million to $1 billion in market cap, because they'll probably be making 100 million tons, sorry, $100 million a year, if not more, from selling graphite. So there's only so much graphite in the ground. There is heaps of graphite there, but you want to take it from the best mines. So I'm going to show you the ones that are probably going to be the ones picked to go forward in production. So these are companies under 100 million because I believe they have the most growth. So just briefly run through them and you can go into them even more. My top pick is this company here, ITM on the ASX. They're going down because they're raising money at 25 cents. If you're already invested, you can get them at 25 cents. If not, you can get it now at 26 cents anyway. So they're about to drill this big thing here, which will give them 50-year mine life. They currently got a JORC resource on a smaller project, which gives them like 10-year mine life. Drilled out, ready to go. But this is going to be the upside here. I wouldn't invest if it wasn't for this. So they've already drilled this a few times, so they know it's there. They just got to drill it more to confirm. And guess what? They're going to drill it, confirm it. And on that day they confirm it, the price will go up. But we already knew it was going to go up because they've already drilled it already. So why wouldn't you just buy before on a lull? So guess what? This company here, pretty much a neighbor to ITM, cost 600 million. Of course, they're a bit further along, though. Guess what? This company was also a small company once upon a time. You could buy it for, it was even 2 cents, I think. So guess what? This is a small company, and you bought in low. No, it will go well, and it did. Guess what? ITM, I believe, will follow that same path. Small company, a lot of growth ahead. Most likely, you'll choose this one to get in production because it's every infrastructure is already built. They're not going to spend too much to get the mine in production, and they've got a local workforce, big mine life. So it's a very top pick for me, and I believe this will be 2026. When there's a shortfall of graphite, this company will probably be worth $1 billion because there's going to be a shortfall, they say, about 2025, 2026. And by that time, these guys will probably have drilled that out quite a bit. So I see this going. So there's market cap, the share price. The share price will X in line with the market cap if they don't dilute it too much. So another factor, RNU, they got a free $200 million loan from the government. It means they didn't have to sell more shares, diluting the share price to get into production. So these guys will probably be the same. The government wants to make Australia a workforce, get jobs, so they'll say, yep, we'll give you money to build this. And guess what? There will be an announcement about that coming out, but you could already know there was a high chance of that happening. So you bought in before, and then on that day, it went up. You bought it for 25 cents, and guess what? That announcement came up. They're already at 50 cents. They went to 75 cents. You just made another X on your money there. So high chance it's going to get into production. I definitely say, well, my money's in it. It's going to go 500 million to $1 billion. And if it doesn't, well, it's just logical that it will, and you have to take that chance. So that's my top pick, ITM on the ASX. They're going to have about 10 million cash after this raising, or about 8 million, which they'll use to drill out that new thing. So top pick there. So next runners up, SGA. So these guys, so I might add, these guys can get it to battery grade using an alkaline process. This company here is yet to do that. They're still doing the study. So they have to find out. It's probably going to happen that they'll get it to battery grade, but they are going to find out, can they do that chemically with acid or another way? So anyway, thing about this company is it's huge. So if you invest in a natural graphite company, you should be able to know that's huge just by looking at the numbers. 209 million tons and 28.5% graphite. So big numbers there. That's an inferred resource, which means they drilled it a few times. Take that to indicated. They have to just drill it more times and say, well, it's definitely there. We drilled this many times. To a standard. You get the idea. So that's them. They're about the same price as... they're even more money than ITM. I think ITM is much better bet. And they're even more money. So, yeah, personally, I'd be putting in ITM. I could be wrong. Do your own research. But, yeah, I think it might be a better bet, maybe. So this guy, he had the company. They sold it off, IPO'd it, and he still has 40%. 40 years experience. Da-da-da-da. So, yeah, it's here. They can ship it to China. China might go, who knows how much mines China has, but, and then they can ship to Europe as well. So China owns the game at the moment, but obviously everyone wants their own supply of graphite. Looks like there's existing infrastructure around. And guess what? You don't know who's going to go well. So that's why I like to buy a handful of companies, because they couldn't all go well, or maybe one goes better than the other, but you spread your risk. Because who knows what will happen. Spread your risk. That's what I think anyway. So next company, so that's a pretty good one. Saratoga, high grade. Might wait till it drizzles down a bit. Maybe get it around 20 cents. Who knows? You might be able to pick these companies up in a year. There could be a crash. You might pick it up for like half the price they are now. But you might want to... Personally, I'm having 1 foot out, 1 foot in. So have some money on the sidelines. Ready to go in case there's some crazy things happening and you get an even lower price. Because eventually we'll come out of that like we did COVID. And guess what? You'll make a lot of money. So lithium, all into shortfall. Price went up. You bought in, did well. Graphite, we're in a lull. And I believe it's going to shoot up once we start needing. Once people realize, well, you can't have the graphite because you haven't got it out of the ground yet, because you haven't spent the $200 million to get out of the ground. We want it now. Well, pay this much for it. And then people say, well, they're making this much. We can make this much in this one. Let's spend the money and get it out of the ground. And that's what's happened with lithium. And probably likely what happened with graphite as well. So let's go to the next good company, who is Vault Resources. So these guys, a bit more expensive, 60 million. They're doing capital raising as well. Funny, they're raising money at 1.8 cents, and the last price was 1.7. So you get it for less than the raising. Might I add, that was heavily oversubscribed. So they wanted to raise 10 million. They got 22 million offered. So heaps of people were willing to buy this at that price. So let's see what they do. So they have a project in Ukraine. Ukraine's in a war, obviously. They own 70% of that. That project, they can get to 100,000 tons. Say everything goes back normal. It's already at 30,000 ton capacity. They can just spend not too much money because everything's already set up and get to 100,000 tons. They make $1,000 a ton. That's $100 million a year for a company that is $64 million. So fair to say the war ends, that shoots up. Guess what? That's just one of the projects. They also have another project in Africa where, go into it more yourself, I'll just go briefly. And guess what? All these projects, they start small, so they do like 10,000 tons a year. The demand comes up, they spend more money, do more. And that way they can also stop dilution because they don't have to raise money. They may have made a bit of money, or the bank will give them better terms because they see, well, you're making money now. We will loan you this money on these good terms so you can upgrade. So we'll look at the stage 2, stage 1. So as I said, there's a smaller stage and then they go to the bigger stage. So 173 million. This is why I see ITM is better, because Renascor, their market cap, to build the mine is 100 million, although it might be small tonnage. Actually scrap that because that's different tons. So you have to look apples to apples, compare the tons and stuff. Where was I? Back here. So they spend this much money. I think the payback was 1 year. Anyway, they estimating they make that much, but guess what? Lithium companies are estimating some prices like this, and then they end up making 3 times that much money, meaning the payback period went from 3 years to 1 year. You get the idea. There's a shortfall, it gets rarer, and the thing is, the graphite goes into Tesla only costs $1,000 right now. So guess what? People say, well, we'll pay you $3,000, just give us the graphite now. And they can afford to pay $3,000 more because they're already paying so much for the Tesla. You get the idea. And they're, well, we don't spend on petrol anymore, so we'll put that money into graphite. And they got a big mining life. So you look at these figures yourself. But anyway, they spend 200 million, and then they make that back each year. Where's the EBITDA? Oh yeah, they spend that, and it's a 1 year payback period. And who knows? It could be a half year payback period if they get ahead of the pack, or as a shortfall. You get the idea. So that's Vault Resources, another one of the top picks. Bit more expensive because you do get an existing sort of mine that's operational. They haven't released figures because they're in a war. It's hard to get the mixing stuff. Okay, next one, not on the ASX, Mason Graphite. So look at these companies. Like, I don't know what happened here, but say they went into shortfall, not even into production, just people's hopes and dreams, saying, well, they're going to make a killing. They shoot up. So now, down in the dumps. That's when you buy stuff. Down in the dumps, when it's still highly likely it'll get into production. So these guys have a really high grade. It's like 25% for the first 20 years, and they've drilled it out already. Look at that. Huge grade. This is really good. So they're going to actually sell half the project, or do a joint venture on the project, get in production, with Nuvimon Graphite. So yeah, there'll be dilution there, but still, if they're making, and the actual feasibility study they're going to do with Nuvimon Graphite is for 250,000 tons a year, which means maybe they make $250 million a year. If they make half of that, if you're making half of $250 million a year, or say that doubles because graphite goes up, $500 million a year, you're making half of that, your company's going to be worth a lot more than $30 million. But you guess what? You buy now and it's all dull. Like, let's go to another example here. And I could be wrong with this. Like, this could mislead me, what happened here. But guess what? These companies, no one needed lithium now. No one needed this lithium. And then guess what? Goes into shortfall, they need it. These companies go bananas. So let's go PLXX, sorry. So guess what? They're in production, no one needed lithium. 20 cents. Oh, we need that lithium. Well, we got heaps of it. We got heaps of that lithium. Bam. Straight up there. So that's lithium, which went into shortfall. So graphite, not in shortfall yet, but looks likely it will be in shortfall. Okay, so next company. Oh, guess what? You can buy Mason Graphite, 30 million, or you can buy their neighbor for 3 million. So they actually they got about a 10-year mine life. They drill it out, they can make it to 20 years, but it's high grade as well. Apparently they got larger flakes of graphite as well. So this still could get into production. This could say, yep, we'll choose your mine. Hydroelectricity in Vancouver. So this company could go from 3 million to 30 million, and look, that's a 10x already. And it gets into production, who knows, goes to $200 million. That's a lot of X's there. Maybe a bit more risk because it's small. And they seem to have a higher capex in Canada. But this company could be the one. Actually bought a lot in this company at around 10 cents. It's come down a bit. And I thought, ooh, maybe I should have bought something it's probably more likely to get into production. But not selling, and this company should go well. So next company, another company I own. It was a bit stupid, bought this on the IPO day for like 40 cents or something. Should have waited till it went dull. 25 cents would have been up right now. Still don't care because it's worth a lot more. So they got about a 10-year mine life now. They're going to drill out. They could probably increase that mine life to a lot more. They've drilled about 20% of the area. So they could 5x the tonnage. And they got all the downstream happening in-house. So you pay a bit more for these guys, I believe, as well. Yeah, you pay 53 million. I think they got 5 million or 10 million in cash, something like that. But they got the downstream, and most likely the Western Australian government guys will help these people out, give them a free loan or something, because that's what they do here in Western Australia. And this company will probably be 500 million to $1 billion, in my opinion. So that's it for my stock picks. I'm not sure if I missed one out. There is a few others. BEM ASX. So 25 million, same thing. They're in Madagascar. No, can't remember where they are. They're in Africa somewhere. Yeah, pretty sure Madagascar. So yeah, they start off small. Some reason don't like these guys as much. Manfrey. But they still could go well. That's why I sort of think you should buy a handful. Because look, they're sort of in the middle of nowhere. They have to ship it there and ship it up to China or wherever. And the numbers don't seem as good. Like small capex. So this company could get chosen. There's just not a lot of buzz around it. It's just like ESS on the ASX. This company's got like 10 million ton resource. You think if I had a bit bonanza about it might be 200 million, but it just seems a boring company. But still, look, it went up when the lithium went up. So that's probably BEM as well. So my thing is I'm buying these handful of stocks at 12-month lows. Like SGA went up. And I said, no, I'm not buying on a hype when it went up and drilling. I'll wait till it comes back down. It's slowly come back down now. And that same day, I took out that FOMO and put it into this company here, which has since gone down because they're raising money, but don't care either. Because guess what? Likely they're going to be worth a lot more when that shortfall hits. So what do you think? Is that shortfall going to hit? I think it is. Like, where's that graphite going to come from? Where's it going to come from? Has to come from these projects. Like, most likely it's going to come from a few of these projects. So what else can I say? Not much really. Just think graphite, best investment. Like anything goes into a battery. Graphite, we didn't need graphite. We didn't need lithium. Didn't need graphite before in such large quantities. And now the battery will take up the huge market of graphite. And that's why I think it's going to go straight up in the sky. So let me know your companies. Bear in mind, yes, I know RNU is a great company, but I like to pick a small company because look, I reckon this company will be just as big as RNU is now, if not bigger, and you'll get a lot of upside on the announcements as they come up, because pretty likely this company is going to drill out that big resource, even if they have, it says 260 million ton resource at the high end, 150 low end, even if it's 100 million. Yeah, they're going to have a lot of mine life there. Take in mind, once they get 10 or 20 years getting this graphite out of the ground, they'll probably be recycling it anyway. So, yeah, that's the thing too. So what else? There's lithium, cobalt. We're getting rid of cobalt because it's expensive. Nickel, probably stay around for the high energy density. But they like to get rid of nickel as well, going to lithium iron phosphate. The phosphate market is pretty big too. Like lithium iron phosphate is iron there. That's a really huge market. Phosphate is big for fertilizer. There's a company doing phosphate for batteries. Wouldn't answer my calls, even though I rang them so many times. And they're at 15 cents. When I was thinking about buying them, they went up. So if you look at this company, they're going to do a thing for battery. The phosphate in the battery. They seem to have a big resource, biggest in Australia. Side note, all the phosphate comes from Morocco. There's a huge industry there. But these guys are biggest in Australia. They dig it up and they sell it. So maybe a small capex, you'd think, like, what are they going to do? I'm not sure. Probably not much to. I think they just dig it up and sell it, actually. Correct me if I'm wrong. So, long, worn out video. Hope you enjoy. I sort of do these videos for myself, just to keep up with the companies. And maybe just think something could take over graphite. So, yeah, maybe not bet everything on graphite, because something else might come along and there goes your money. Same with lithium, but it seems unlikely if you dive in deep, 100% silicon anodes aren't a thing that's going to happen soon. There's sodium-ion batteries, which will probably take over because everything's more abundant than a lithium-ion battery. So sodium-ion batteries will probably take over lithium-ion batteries. They're heavier for the energy, but who knows. So happy investing, and just remember, you can make a 5x in this, but if you start your own company, like, who's making more money? The guys that start these companies and then get you to buy them, or the people who buy them? Probably the people who buy them. So maybe aim higher than just investing. And if you want to play around the side, maybe investing. But I don't know, go for your dreams. And that's it from me.